Sorry, guys. Huh? No one noticed that. Oh, shit. Sorry. Okay. I go back here again. Okay, so sorry for that, guys. Thank you, Colin, for informing us. Oh, okay. Apology. Okay, so sorry, I go back again. Okay. Oh, dear. Okay, so today is the 31st of May, 2021. Today is the day whereby we have to monitor, in my opinion, and my caption is monitor the US dollar closely, all right? Because they may become the main catalyst, as I mentioned earlier. And of course, today is a Memorial Day for the US federal. It's a federal holiday, so take note of that. Today, stock market won't be open. I mean, there's some trading on the CFDs, but the market will be very quiet, okay? And of course, this is the day whereby we observe, the American observe it for the last Monday of May, all right? So you can see all the flags and, this sort of thing. This is a very nice picture. I love this picture a lot. It's like really showing that, it is the army that basically keep the younger generation safe, all right? So next time itself, this will turn around and keep on going in. That's why I like this picture. And of course, this is why I'm worried for American, because it seems like they are having their first master's holiday, all right, for a year. And look at the, wow. I mean, just a joke in my mind is that if our social distancing officers walking around, I think all these people will kena all the fines. But of course, in America now, it's very safe to do that. And this is what I'm talking about Janet Yellen and Jerome Powell delivering the monster. Okay, so the inflation monster is really creeping into the market because you can see things are getting more and more expensive. So if Jerome Powell and Janet Yellen can really control it, then of course things it will be good. If they cannot control it, right, then we have a problem. And that's why even the bull and bear are now standing side by side and seeing what's going to happen next. Because if this inflation monster comes in, it will affect the bull and affect the bear at the same time. That is what it is trying to say in this picture here itself. All right, disclaimer as usual. All right, please understand this. If you are staying on, do note that there is a possibility that you may incur financial losses because of whatever I share. So do take note that, okay, if you trade, please trade with care. We also want you to make money from the market, but we also want you to make it in the right way. So guys, kindly take note of these potential losses here. Okay, cool, huh? Okay, so if you're staying on next 5 seconds, that means that you accepted the term and condition and you don't mind listening to what I had to share. Okay, just give me a minute, guys. Just realized my face a bit dark. Today I'm not in my office. Hold on, just give me a short sec. Slightly better. Okay, all right, let's continue. Okay, so let's motivate one another once again. Nobody can hurt me without my permission. This is from Mahatma Gandhi, and I think that this is a very powerful picture. I think the end of the day is this: we do get hurt by people once in a while, but as long as you don't let this hurt, okay, this pain come to you, you can actually stay strong and not affected. Of course, sometimes a lot of words really hits people, whether it's from your family members, your friends, or even outsiders who are totally stranger. It does hurt sometimes. But end of the day is that you must remember this: no one can really hurt you if you don't allow that to happen. So, so guys, whenever you do, all right, if you feel hurt, okay, just tell yourself this thing here from Mahatma Gandhi. All right, I think it's a very powerful quote here. Okay. All right, so let's start with this morning with the reasons for staying bullish for now, okay? Staying bullish, Okay, first of all, wow, look at it. The record flood of people getting involved in the market. Look at it. It's a record flood of new capital entering the equity market and validating the retail buying. Now, recently, many retailers have came back to the market. Not too sure why, but it seems to be they are buying into the retail stocks, penny counters and stuff like that. So basically, when you see that happening itself, right, there's two prongs to it, as I mentioned to you. One, maybe the next round is back to the blue chip again, and the Dow will go to a new record high. That's one way to look at it. Another way is that you can look at it from the other way is the market itself, right, is really near the peak. So it's actually everybody's call at this point. But you look at the amount of money involved in 2021, the money that came in is twice the amount of 2017-18. Wow, look at it, almost twice. Incredible. And of course, the S&P 500 since March last year until now, okay, sorry, it should be under last 4 months, in fact. Right, the S&P has not gone down more than 5%. Now, we have one big movement in March last year, and we had another one in late last year. Then after that, that's it. We have all the way been about 3.7 to 4.2%. So this really tells you that the market is full of buyers. So that's why remember, when this type of market condition, any pullback is more for buying than selling because the market is full of buyers. Unless there is a very big movement, and if the market can go past 5%, that means that something is very wrong. So that's why I would say this: as long as the market can still maintain and this type of movement, right? The S&P or the US equity market has a bit of limitation to come down in the market. Okay, this is something that you have to take note on this. Okay, all right. Now we can see that the gold is doing very well compared to the rest of them. Okay, DM I think is Dow futures, if I'm not wrong. Then iShares is bonds. Then we have the dollar spot. So overall, everything is okay except for the dollar. The dollar didn't do well overall, but the gold is doing well. So you can see that when the dollar is not doing that well, gold actually goes up. All right, overall itself, right? Some of the meme stocks are moving very high. And of course, we have crypto coming down recently. So this is what is happening right now in the front. And gold is now the new hot asset, okay? And of course, in terms of equity itself, right, everything's doing fine from Dow Jones to NASDAQ to S&P to Russells. Everything's doing good except for the NASDAQ. The NASDAQ is down a bit. NASDAQ is down by 1%. All right, 1% overall, okay? One percentage point, all right? So basically, if you've been buying all the epicenter stock itself, S&P, you're doing well. But for those buying technology, you may not do that well. So that is whereby the focus is, if you look at rotational play, some people saying that, okay, now we should actually get out of this epicenter stock and buy into the NASDAQ. Well, that's one way to look at it. The other way is that you can actually say, okay, maybe I should avoid the NASDAQ stocks, okay? So there's two ways to look at it. But this is a chart to show you the entire chart movement for entire May period. Now, this is something very good. You can take a look right here itself. This is all the fund flows into the different equity sectors. So why last week, why the market is so slow? Because look at the amount of funds going in the market. You see, so little. The amount of funds that go in the market was so little. That's why the last week of May was so quiet. And of course, why NASDAQ recovered a bit, because the funds, majority of them went into the information tech sector. So you look at it, right, the last 3 weeks before that, the outflow is so much. That's why the NASDAQ kept on coming down. All right. So that is why you can see funds do move the markets. All right. So based on here itself, there's nothing really caught my attention, but the one that's been positive in the last 5 weeks, you have the same blue line is the materials. They are the one that are doing quite okay. That means that all the commodities are doing well. The materials are okay, doing pretty well. Overall, been positive buying over the last 5 weeks. All right, so this is what you guys seeing here. You can take this chart and you can now tell yourself this. The one in purple, this one is financial. Last week itself, financial is not doing that well, but that's also because of the memorial weekend. But you can see that why the market is so strong, because of the financial shares that's leading the market. Okay, cool, right? Okay. All right, so do note once again for our event will be coming out on the 19th of June. We will be having our registration page on the 6th of June. All right, 6th of 6. All right, that day we will release the website for you to sign up. All right, so these are all the things that we talk to you. The main thing is this: we believe that the next 6 months, gold will be an asset. Gold will be a good bet, and gold can actually do pretty good for your portfolio. But of course, silver will likely be the main highlight, because I believe that silver will go silver will go up faster than gold in terms of percentage point. And of course, we talk about some big conspiracy theory about how the boys control the market. It'd be pretty cool. All right. So tell your friends that this is really one of the long-awaited talk show, because I wanted to do this like a few months ago, but the market condition wasn't well. I say no, we don't do that. Now, if I were to come out and talk about gold, that means that I can tell you this. I personally believe that gold will be going higher in the months to come. So that's why it'll be a good idea to actually come for this event. Okay, it's a Zoom online, so you have to register, get the Zoom link, and then you will come in on that day itself. Okay, 19th of June, okay, Saturday, 11 a.m. Singapore time. All right, in the second half of today's MAO, we talk about the dollar, the US dollar net change, the silver, and the most expensive gas in 7 years. All right, that will be the second part of our MAO later. Okay, so now the thing is this, let's talk about some global news right now. Global news, okay, our Prime Minister Lee Hsien Loong will be addressing the Singaporeans, which are us, all right, on the country approach to tackling the COVID-19. All right, that will be at 4 p.m. today, okay, 4 p.m. today. So the good thing is the new community cases have stabilized over the last 2 weeks, that is for sure. And now with more Singaporeans staying safe and working, that will be good, okay? So this is the numbers. You can see that we have an explosion, a specific number when about 27th of May. Then after that, April. Then in the early part of May, the numbers go really far. And then after that, ever since then, the market have been okay lah. If you put that word stabilizing, yeah lah, it didn't keep on going higher. So of course, Singapore do their part by actually closing and cancelling many events. So that's good. That's very responsible government. And of course, they're going to introduce more money, into for the job support scheme and rental relief lah. So that's something that is good lah for people who really need help. Okay. So, but in Malaysia itself, it's interesting. Malaysia, everybody was looking at the 10,000 mark to break, but apparently itself, Malaysia came out 6,999. Okay, so that means that the cases have dropped 2,000 cases in just one single day. Sometimes when I see this, I just had a smile. I mean, if you drop down to maybe 8,000 or low 9,000, I can understand that, but suddenly drop 2,000 cases. So I say that good. For on the good side itself, I think it's good. So of course, they imposed this total nationwide lockdown. Maybe that really helped. But that is on the 1st of June, right? Not yet. So I guess gonna question mark here. Just I say that suddenly we have 2,000 cases drop. Wow. Because everybody was betting that it'll be 10,000. So I heard a lot of friends who betted 10,000 or lost money. Okay. But I really wish that the Malaysian, our counterparties, our friends here, they actually recover from this, all right? Because we have many TWB students who are Malaysian or who are Singapore PRs, so their families in Malaysia. So I really wish them all the best, and I wish them a speedy recovery and stay safe, okay? All right. Time to go to NTUC. I don't think so. I don't think so. This time now, I think they may actually change. Who knows? It may go back from 2% to 4% again, likely, There's I believe that will happen. Okay, so we have big numbers this week. We have the big jobs report that is this on payroll this coming Friday. All right, so we are looking at a big number jump. All right, because last month we have a 266,000. This month we're looking at 674. So that is a movement upwards. That's why there is some upside. So the thing is this. On the 15th or 16th of June, there's FOMC. So we will expect that the Federal Reserve will be talking about what they view. But as we know that this likely will be a non-event again, because no matter how, whatever is happening, I don't think Federal Reserve will be bothered. That is something you must understand. So you can see that even the yields is now basically very flat, 1.6% for the last 2.5 months. So in my opinion itself, right, there's nothing to worry about this FOMC. Likely itself, the market will still be moving up towards that point. Then maybe after that, then there'll be some profit taking. All right, that's my view. All right, so I suspect that this will be the likely direction for this coming 2 weeks in the market. So we have this coming week, we have the ISM manufacturing data that is on Tuesday because today's holiday. Then the numbers seem to be expected to be the same as last month. Then we have the ADP numbers on Thursday. Then we have the Friday, we have the non-farm payroll. So this week is all right. The last on Thursday and Friday, we do gonna see a lot of stuff. Okay, because ADP, I think it's being pushed back all right, by 1 day. So all these things is all right will be very interesting to watch. So traders, you need to stand by for this week. Okay. All right, so let's just recap what happened on Friday. Friday have been very sluggish day. The whole entire market up down 50 points only. Why? Because it's a long weekend. So long weekend meaning usually traders will not really trade. So that's why we want you, and you don't see us telling you don't do much on Friday, because that is the point that you need to take note of. So what actually happened on Friday basically is just a fourth straight positive month for S&P 500. And of course, we have the S&P now is 0.8%, just 1% below the record high level once again. So as long as the market just refuses to go down, there's no reason for you to sell unless you have something that you know or you have really take your risk management in a very positive way. Then, of course, the one that is pushing the market is Russell 2000, because it seems that they had a lot of buying funds and they want to chase after the, I think, growth. So they have just posted their 8th straight positive month since 1995. Wow. So what is happening here is that they're just pushing, and making sure that they make more money. Because Russell 2000 is all the smaller caps. So if they are actually moving up, right, a lot of big percentage gain is there. And because of that itself, right, okay, a lot of funds are making some good money to do their, year-end valuation. All right. Then, of course, we do have some inflation numbers at the core personal consumption expenditure index. It rose 3.1%. It's higher than 2.9, but the market is the market concerned? Nope, the market is not concerned. They felt that this is actually good because they feel that, right, the number may have gone up, right, but the people are not that worried, and because of that itself, right, the real yields are still down. So that means that it's a very good thing. So that's why they feel that this is a transitory sweet spot, okay? And people are still looking to buy more. So once again, I keep on repeating for the 4 or 5 times, as long as inflation is so-called going up, but the market is not worried, there's no concern. It's only when the inflation really goes right into hit the person itself, and then the stock market is not going up, that is where usually the concern, the panic will come in. So that is something that you have to take note, because this has never changed and it will likely repeat and repeat and repeats. Okay, so traders, take note of that. Right, because today is Memorial Day, so there is no US news available. Those news that I have is just 2-3 days ago, so really pointless. So I'm gonna skip this part. Now let's recap what happened on Friday. A quick one on Friday. So basically, you can see right here itself, the market opens between the 2 pivots. But because the KSI is still red in color, so the upside is kind of limited. So we also know that, what happened is that the market really didn't have any movement. You can see that the market entire day is trading between at the OP level, even no chance of going to the KTR +1 or even KTR -1. So in short itself, Friday was really a non-event almost. So nothing can be done. So you must know that, guys, even we have the system running, the colors are moving, but if the market has no funds, no one coming in to play the market, it's going to be pointless. That's why you have to take a long holiday like this. Okay. All right. So let's look at the equity market for today. All right, the equity market now. Okay, so China A50 is going to open up soon, so I'll come back to this later. Let's look at the Dow Jones first. All right, like today there is no trading, so don't expect big movement to come unless the Chinese market or the European market going to do something, to it. So let me just draw around and show you my point first. Now, first of all, we must be clear that the market has went above the 61.8. So that's why this one must take out the Fibo number, must take out already. So there's no point talking about this. So I'm going to draw for you now the key point to take note. Now, first of all, we have the MLP for today. It's somewhere around here, about 34,560. That's MLP. But again, I repeat myself, this is the US holiday. We don't expect big movement today. Now, one thing to note, there is a BMB, right? There's a BMB here. Okay, so the BMB. So I need you guys to take note. Okay, this is the high of the BMB. Okay, there we have the, okay, I need to change this thing here. orange tick. Okay, hold on. Okay, so what we have is that the BNB high and low. Now, yesterday, about 5 p.m. Singapore time, I did a session on BNB for all the TWB students. So I think it's a very informative one, and you can actually learn a lot of stuff from there. If you can, do consider to actually watch the video. It's on our TWB revision group here, and it's about 50 minutes. All right, watch it. It will really help you a lot to understand BNB better and how to utilize it. So we have the BNB high and low, and you can see that the MA30 is beautiful. It's really incredible. All right, the BNB, can you see that? The market touches a BNB, the market touches the MA30 and instantaneously it rebounded. It happened before over here. So that's why the MA30 is very powerful level for traders. You can take note and utilize it to help you in trading, okay? All right, so with that itself, then we can see that for today, as long as the market stay above the MLP, there will be upside. All right, but I say for today, it'll be a slow trading day. Okay, very slow. So you can take a break today. All right. All right, then the weekly chart wise itself, the market is beautifully still maintaining on this uptrend. And the BNB on the weekly chart still tells me that, right, the Dow is still within the range. So as long as the Dow stays within the range, the market will have no much direction to go unless a new BNB is formed. So if the market can break above the BNB RL, wow, we're going to see a new high level. We can even see as high as potentially maybe even 36,500 level. All right, that is the possible direction. All right. On the downside itself, if the market do come down, then of course this could bring the market down to about 32,000 plus. So it's going to be a very big range in the market. So we'll watch this carefully. We'll track this as and when we see any big movement there. Okay. So let's look at the Dow Jones for today. Like I say, today will be a very slow day, very, very slow, but I still need to do my MAO, right? So what I'm going to see today is that the market is now trading between the two pivots. So above OP, then there'll be upside, all right? Below OP, then below P2, there'll be downside because the KSI happens to be red in color. All right, so if the market goes below the P2, there could be some profit taking, okay? Below P2, okay? All right. So that is what is happening right now in the market. Okay. So let us take a look further at the NASDAQ. The NASDAQ is also pretty flat at the moment because of 2 days in a row already. The market has been pretty flat. All right, the Fibonacci, I'll take it up. Let's break down all the levels in. Okay, here we go. So you can see that's cleaner, all right, in this way. Now you can see that the NASDAQ have been having two dojis for the last 2 days. So usually when this happens, so that means pretty sure that there'll be a bigger movement coming in, because normally when there's two dojis in the market, right, usually for NASDAQ, there'll be a big movement soon. So we don't know which side the market will choose, but definitely we have to follow through when that happens. So watch out for the next few days for the NASDAQ. The MA30 itself today is somewhere here. So that's about 13,537. So still, but today there shouldn't be any much big movement today because of the Memorial holiday. Okay. So yes, indeed, if someone asks me, Cal, today can I don't trade the market? As long as it's not US related market, you can just give it a miss today. Really, there's no much reason to do that unless you believe that there's going to be big movement because of their holiday funds may come in. Now for NASDAQ today, the market now is trading above P2. That is positive because the KSI is green. So as long as the market stays above P2, there should be some upside. All right, there should be some upside. Okay, all right. So let's look at the S&P 500. S&P 500, the same thing. I need to remove away the 61.8. And then we have today now is the S&P that is trading between above the MLP, and MA30 is here very strongly supported. And of course, there's a new BNB there. So I'm going to put a BNB here, high and the low, and that'll give you my trading range for this week. Okay. All right. So that is the S&P 500. And let's look at S&P for the TWB chart. Also do the same thing. Oh, the only thing that need to be concerned, S&P chart, although the S&P is 1% away from all-time high, but the KSI happened to be red in color. So if the market stays below OP, then there'll be some selling pressure. But of course, if the market stay above OP and above P2, then do take profit at KTR +1. Okay, that is a good advice that I will share with you for today. Okay, all right. Okay, China has opened. Let's take a look at China today. Oh, China has gapped up. That's good news. China has gapped up yesterday, closed at Friday, closed at 18,357. Now opening price is 40 points higher. So let's put it in. That's the MLP. Now the last 3 days, you can see that the market came down, and every time it came down, right, the market recovers very strongly. Now this is a very bullish signal. So which means that China A50, right, do have the possible potential to go higher. So which means that, right, if you ask me, China A50 can really go higher in the time to come, because this is a very, very bullish signal, because no matter how the market comes down, right, the market recovers. So if after a big movement like this, if the market still cannot come down, the next wave will be even higher. So I kind of suspect that, right, if the Chinese market doesn't pull back, then it will go up to minimum here itself, and that's 18,790 range around there. So this one you have to watch. So once you see that the market finds some strength, the market may really go towards this point itself, because this is showing that the market just refused to come down. Only if the market really one day pulls back below the two tail here, that means that this buying is fertile, and of course then the selling will come in. All right, so traders just kindly observe the market deeper for the Chinese market. Okay. Yeah, indeed, Colin. It's more like wait for pullback and buy. Yeah, something like that. Yeah, right. Okay, so that's the Chinese A50. Let's look at Hong Kong. Now, Hong Kong also performed exactly the same thing like what we saw in China market. So we have MLP for today somewhere around here, and we have the MA30 that's very strong. So overall here tell us that there is no real concern. So likely the Hang Seng, you can see, have been pretty flat over the last 3 months and have been strongly resisted about at 29,000. Okay, I need to change the color a bit. The market is still trading around this area at 29,200 area. So which means that if the market for China market, if you can go past it and step up, right, then of course the Hong Kong market will also follow through. So with the watch closely, well, this has been a very strong common resistance point. So a bit different compared to the China A50. You can see that whenever the Hang Seng come to this point at 29,200, there seems to be some form of resistance in the market. Okay, some form of resistance. So we had to watch this market closer. It's a bit different. It was China A50 already break out, but Hang Seng didn't. So that is the difference there. Okay, so DAX. Let's take a look at DAX. Now, DAX is still firming very nicely above the MA30. So for today, MA30 is still going to be the main support. But likely that if the US market this week push up, then DAX most likely that's a new all-time high again. Now, DAX overall, so you can see all the long tails tell us that the market is still full of buyers. So there's no lacking of funds at the moment. So for traders, we just have to stay on the long side. Any pullback will be more instrumental for buying than selling. Okay. All right. So that is the that's DAX right now. And then I do Nikkei. As I promised you guys, I'll put in Nikkei. Now, Nikkei today, pretty flat, not much movement because I think it follow US market very closely. Is supported now at MLP today. So as long as Nikkei stays above MLP, it still have this potential upside to go. Well, the upside can go all the way to 29,365. Now, the only thing about Nikkei I must let you know is that the Nikkei will love to have a strong US dollar. So if later on in the US dollar do strengthen, okay, and the equity market doesn't move much, right? Nikkei has the potential to go to this point, and that's 29,360 region. Now is that now at 28,990 region. So upside potential is 29,360. If the dollar climbs up, because that will depreciate the yen, and the Japanese would like to have a lower yen, because if the yen is too expensive, it's going to hurt their import-export business. All right, so that's what's happening right now. But overall, it's a very bullish market for the Nikkei for time being. All right, so I've covered basically all the indices. I hope you guys have I like it. Now it's still a bit early. We've got to go back to the commodities market first, okay? Now, this is gold for the entire week itself, and gold have been sluggish, but bouncing around the 1890s to 1910. All right, this is the whole entire week bounce around, but we can see very clearly the gold, whenever it pulls back, right, almost immediately, there'll be a strong recovery. So that means there's a lot of buyers in gold in the market. So, but same thing again, today is a Memorial holiday, so we will have no news for you guys for gold. So let's do a recap of what happened on Friday's market, shall we? Now, Friday, the market gold opened between the two pivots, and the KSI is green and no blue bars at the bottom. This is a very bullish sign. So because of that itself, as long as the market stays above OP, it will be a buy. And more important is that even the market came down to pivot 2. Can you see that? By logic, below P2, below OP is a sell. But because you must remember that KSI is green. So if the market do rebound and go back above P2, with a CCRY at P2, it will be very bullish. So for a trader, you can actually either can react this way. You can sell when it go below P2 and OP, but you must remember that once the market goes above P2 again with CCRY, you must return to cover back your shorts and go long. This is something that you have to remember. It's a very, very important thing that you have to remember, okay? So if you remember what I just said earlier itself, right, and then you look at the chart, you can see why things recover right that point. Look at it. So gold basically was below OP, it came down, right? But because the KSI is green in color, so once it hit the CCRY with a KTR -1, you can see this is a BMB, and instantly the gold goes up, all right? Now gold did not hit the OP, but if you look carefully, the entry to stop loss, this X itself, right? The market has given you the 1x profit already. So actually that is pretty decisive, okay? Then after that, the gold came down, right? And it go all the way down to P2. Now by logic, below OP, below P2 is a sell, but the color change is so far away. If you sell here, I won't fault you for doing that. That's called a discretional short, but you know that, right? The KTR, right? The KSI is green in color. So once the market reverse course, when it go back above CCRY, and this time round trigger P2 and KTR -1 at the same time, you should be buying. You should be buying, and then this is your risk, your X. And of course, did the market give it to you? Yes, the market has given to you the X profit very nicely. So that's why, if you remember what I tell you guys, when the KSI is green, you focus on buying at the KTRs and the pivots will be a better choice. That's why I think some of you went in to buy gold when it came out to 1885. Congratulations to you. So could do that. That'd be better. Now to short the market, right? It's not say you can't do that. It's just that you notice that you can go down, but you can see the market recover even faster because the market now is full of buyers in the market. So relentlessly now, anytime the market have an opportunity to buy, the market will buy. So got my point? So watch the KSI very closely. This will definitely help you to make money from the market. All right. For those who make money in gold, please key the word made. All right. If you have made money in gold, please key the word made from gold, or made also can. All right. Because if you have made money from gold, that will be the best thing to tell me and tell everybody around you that, hey, they're missing it out. So you made money from gold, please let us know so we can actually see how many of you have made money from gold. Okay, so only have Mandy out of my 85 of you guys, only Mandy made money from gold. The rest, holiday. Okay, so Anthony have also made money from it. Okay. All right, good. Never mind. As long you guys make money from gold, that is the most important thing. All right. So the rest of you may not have made, because Friday was a slow day, right? No worries on that. Okay, let's continue now. Market is going to open up very soon for the Hong Kong market. Let's just go back down to the equity market. All right, so let's jump back all the way. Okay, China A50 is totally not moving, very slow. So likely that Hong Kong will also be something like this for today lah. Likely Hong Kong will gap up a bit, then after that will go a bit sluggish for today, likely. Yu Ming also make money from gold. Okay, excellent. Okay, so we're gonna wait for the market right now. We are just about 30 seconds away. Hong Kong is going to go slow today, but okay, let's wait for Hong Kong now. I put on my chart, but likely Hong Kong will gap up first this morning. Okay, Hong Kong has just gapped up this morning. As you can see very clearly, Hong Kong has just gapped up. And now after a gap up, it's coming down quite fast. Wow, wow, wow. Okay, this is quite fast movement from Hong Kong. Okay, there's some selling. Now, Hong Kong today, this morning, we have a flat top, morning flat top. 29289.5 is the opening price. And the moment it opens, only straight away, they're selling right in the market. But do note the KSI is green in color. So maybe after the initial profit taking, there might be some recovery again. So we will watch Hong Kong closely, but at the moment now, Hong Kong is having some selling pressure lah. So not too sure why suddenly this morning a lot of pressure in selling. So we will observe the market slowly, but overall itself, this is happening right now in the market. Okay, so now you can see Hong Kong is recovering again. Slowly is recovering. Okay, so we will observe the market a bit closer. Okay, let's see what happened later on. China A50. Okay, there's some selling now in China A50, so that probably explain why we have this movement in Hong Kong. Okay, so but then again, we have seen it many times in the afternoon. The China A50 will recover, and for that, Hong Kong will also recover. So maybe that is the movement, all right, for today. So we will take a look and we will study this closer later on. Okay, so now we already know what's going to happen and what happened in the market. So we observe this a bit closer, but now below for Hong Kong now is trading below OP and below pivot 2. But because the KSI is green, so to sell itself, right, traders, you need to be fast in, fast out if you really want to do that. Okay, I can see that this is what's happening on the Hong Kong market right now. Once it gapped up only, straight away it sold down very strongly, very fast. So normally when the market have a flat top, where the opening price and the high is the same, I'm not that comfortable until the market recovers back above the OP. All right. But of course, if the market can recover above OP, the buying could be very strong. So I'm going to put my quote here itself is that if the market do reverse course and goes above the OP, the market to go to this point, KTR +1 is going to be very high. Okay. So traders, if you want to look for buying opportunity, wait for the market to settle down first. Okay. Settle down first. Oops. Okay. Okay, let's look at the gold market right now. Okay, this is the gold chart. Now, gold is showing very good promise of higher level. Gold is moving up very instrumentally. So for gold today, the possible for gold to go all the way to this point here, that's a 23.6. All right, that's about 1925. All right, still the gold has the potential to really come down, to go up to this point here. And this point is 1925, which happened to be the 23.6 of the Fibonacci. All right. Now, Fibonacci is not part of the TWB system, but of course, traditionally, a lot of people using it, and we're now on conventional chart, so I'm showing you how it works. Now, more important thing is that for today, if you study the BNB positioning of it, now there's a BNB on Friday, so by logic, if the gold can stay above the high of the BNB high, which is 1905 today, if gold can stay above 1905 today, all right, which is now, then there is a good chance that gold will go up much higher, okay? So traders, just take note of that. This is going to be the quote for today. Let me just clear my chart, bring it to you. So the range of the gold, the high to the low, the high is 1905, the low is 182. So the difference is about $23. So which means that if the gold do go up, the gold can go to 1928. 1928. That means that gold has the potential to really go past this 1925 mark, because 1928 will be the 1 times 1 of this gold BNB. So if gold can stay above 1905, okay, 1905, that means that gold has the potential to go all the way up to this 1928 or at least 1925 level. Okay, got my point? So I'm going to write it down for you. If gold can stay above 1905, it has the potential to trade towards 1925 to 1928. Okay, so I've given you the target or where the gold will be going. So unless the gold pulls down, then of course it's a different thing. So when the gold comes down, then we talk about it. But at least now we know that the direction that where gold will be going. All right, 1925. Okay, this is 1925. I realize it's being blocked. 1925. Okay, so we are very clear on what we can do, what we can look forward to. So gold, the key point for today for the BNB RL will be 1905, right? 1905 level. Okay, cool, huh? Okay, so I already give you the takeaway for today. Very, very important takeaway. Now the weekly chart is still very positive. The weekly chart tells us that, right, the gold can go all the way to about 23.6%. And very interestingly, that 23.6% happened to be about 1927 to 1928. So that's why, again, the probability of the market going for the weekly chart to 23.6% is also about 1927 to 1928. Hence, therefore, that means that if gold can stay above 1905, the high chance of 1925 to 1928 is definitely there. Okay, but of course that comes with the point that the dollar continues to stay weak, because the dollar is the main catalyst that is impeding, that's pushing out the market, okay, for gold. But once the dollar do come down, then we have a problem, okay? So overall itself, just take note, 1905 is still going to be the very important level for all the gold lovers, okay, for this week, 1905. Okay, you got my point? Good. Let's look at the gold now. Wow. Gold this morning has exploded towards the upside. You can see there's a BNB here, and you can see that it basically touches the OP beautifully and rebounded. And after that, although it's a CCYR, but the market did not go below OP. And then after that, CCRY again, this is a very strong good buy, although there's no trigger, but the BNB is there. So when the market crosses it itself, right, we know that the boys have, it still want to buy. So now gold is moving towards the 1910 mark. Now for the day chart, very positive because it's above OP and above pivot 1. Now you guys know already, right? Above OP, above pivot 1, there's only one answer to this. Is that above OP, above pivot 1, all the CCRY you can look forward to buy. Can you see that? All the CCRY you can look forward to buy. So down, that's why today, based on our rules for engagement, is right, buying above OP, buying above OP and CCRY will be the best thing to do for today. But again, I remind you guys, today's Memorial Day, so the US market itself is closed. So you don't need to put too much emphasis in short. Don't put too big trades because the market is still lacking of volume. So just go slow, okay? You can have a good aiming, and aim for the higher. You can aim for buying, but just don't go too big, okay? A gentle reminder, all right? You don't want to be caught on the wrong side, okay? All right, we have the goal today. So very clear already. I tell you what will happen today. Above OP, above pivot 1 is a buy. And then where's my silver chart? Hold on. Okay, here we go. Now for silver, you can see beautifully on Thursday, the market came down, hit the MA, beautiful, and then rebounded. That's why I say this MA 30 is fantastic. All right. Now do note our MA we are using is weighted moving average, and 30 is my number that I created. All right. So it's not the default number. So of course, why is it accurate? Because I put a lot of effort to back test this, and I know the MA 30 is very powerful to use. So guys, stick to MA 30, okay? All right, guys, by the way, I realized that y'all didn't, not many of you like today's MAO. Can you put a like button there as well? Come on, guys. Do me a favor, put a like button on today's MAO. There's 91 of you. I need at least 20 or 30, right? At least, come on, man, make my day in the market, shall we? The increase the likes now. Yay, yes, correct, guys. Yeah, I'm doing so much for you guys. I think I deserve to have more likes, right? Correct or not? Okay, thank you guys for doing that. Okay, all right, appreciate that. That is really this is the only way to appreciate me lah. I think that's something. Thank you for that. Thank you. Wow, suddenly so many. Wow, who not angry? Who's unhappy with me? Who put angry face? Oh, okay lor. You put angry face really Okay, anyway, let's continue here itself. Okay, thank you guys for all the likes. Thank you. Wow, moving up so much. Okay, that will be for today's gold and silver. And we look at crude now. Now, crude is still going to move up higher. You can see that as long as the dollar is pushing up, there's no reason for crude not to go up. So as long as the dollar keep on coming down, commodities in general will still be up. All right, so crude oil, if you look at it from the long-term chart, right? Wow, look at it. Crude oil long-term chart itself, there's some resistance around here, about $68. After that, it's all right. Wow, another big movement all the way past $74, $75. So the question is this: do we have the capacity to have the crude going past $70? Well, if the market is telling you that there is a lot of economic recovery, by right, it's possible. Now, think about this. Just a few months ago, we have crude oil slamming down below $10, and the whole world was in a panic mode. After that, it's out today, crude oil is at $60. So it's 6 times your investment. So if you actually invested below $10 back in just only last year, March, right? Wow, 6 times profits in just 12 months. Incredible, right? That is how crazy the market is when the market is suddenly lack of liquidity. So that's something that you must take note of that for crude oil. All right, so we'll cover this crude oil more tomorrow. I will reduce our chart for you. I'll show you more about my views on crude oil. Okay, so we have by theory come to the end of today's sharing session. We have Hong Kong still coming down. We have China A50 also down this morning. So it seems that there's some profit taking upon this US holiday. So is it by propaganda or just because they want to do profit taking? We don't know, but we will have to accept that there's some selling now in the equity market. Okay, that will be all for this morning session for the morning first part MAO. We're going to go into the alternate market views. All right, for those who haven't put the like button, I would love that you do that for me. That will be my best way to thank me for even on today's market. I still wake up and I do my MAO for you guys. All right, that's 90 of you. That's a good number. So can I have at least 50 of you guys liking today's sharing? All right, at least 50. I can't see how many here we have now, but I just saw that number increase quite a fair bit. All right. The like button is the one that on top, below my, I mean, when you're watching this, right, there's a like button on top, beside the comment one, okay. The one that you're kissing, hearing right now, all the love thing itself, right? That one is just the emoticons, right? Thank you. All right, thank you. Thank you, Liu. Thank you. Thank you, Eric. Thank you for being engrossed in this. Yes, Pimpin, like the one outside, not the emoticons. But emoticons, you give it, it's just nice. I look at it, wow, sprouting now is very nice to look at. But the rating not so fantastic. Okay. All right. Wow, who give me angry face again? Walao, I so bad, man. Keep on giving angry face. Wow, angry face come out again. Wow, again got angry face. Wow, not happy. Okay, we will start our alternate market views in about 10 seconds time. Thank you, Colin. Steady lah. Wow, Colin, always one of my top supporter. Okay, guys, we're going to start our this alternate market views right now. Today, alternate market views a bit longer than usual. So let's bear with me. Okay, let's go. Now, first of all, Fang stocks has recovered since 12th of May. So actually, it's a very good thing. But if you look at contrast from the May start to May end, we ended a bit flat lah. So overall, you know, at the Dow Jones, the Russell, the S&P, all of them went up. So only the NASDAQ actually closed lower, and primarily because of the Fang stocks. If the Fang stock didn't recover like this, I can tell you the NASDAQ will be lower than it is. So is it because that there are people moving away from the Fang stocks? Well, I would say the answer is yes. Because now the thing is this, you must understand that if US Federal Reserve want to allow this inflation to build in, so it's just a matter of time, they will have to hike interest rate. It's just a matter of time. No audio? Can you all hear me? Have right. I can hear myself. I can also hear the background voice. Can you all hear me? Can you hear? Okay. So maybe Andrew must take note. Maybe sometimes it's accidentally you may press the button. Okay. All right. So I continue. Maybe okay. Okay. Sometimes when y'all cannot hear me, y'all just need to get out of this this Facebook and come back in again, refresh again. So usually that will work. All right. So that is my reason why I believe that Fang stock itself, right, must be concerned, because if really US Federal Reserve is going to allow inflation to creep in, they will hike rate later on, and this will not do well. So to me, Fang stock overall at this moment now, even though it's cheap, I will not encourage you all to buy. It's not really worth it to buy. Okay, so traders, just be careful on this. Now we can see the WSB, sorry, the Wall Street bets. Okay, all the heavily shorted baskets, right? You can see that all the meme stock are going up crazily, right? So this is a very strong upside. It's more than 33% in the space of just 15 days. Now, 33% in 15 days is really crazy. So because of that itself, right, this is something very dangerous, because you know that all these counters are already of very low value, or at least their value is not as high as it's supposed to be. So because of that itself, right, I kind of really worry for a lot of traders, because as a trader, although we can see from a positive light after the penny counters or the retail counters, next movement usually hit the big boys again. That's on the positive side. But on the negative side itself, right, after the penny counter and all the small shares goes up, right, usually that means that the market is near the peak. And if the blue chips are actually offloading, then that will even be worse. So I would say this something here, guys. While these meme stocks are all going up, right, watch out for all the blue chips. If the blue chips are actually coming off, right, be very careful. This actually could means that the market could be near a peak soon, because that is whereby euphoric movement usually will bring the end of the bull market. All right, so just be careful. I'm not saying that it will come in, just take note of that. Now, this is something that you have to take note. This is the US spot gold and the 10-year real inverted. Now, what you see is that normally the gold and the inverted yields really move together, okay, moving together. But after recently, you can see gold push up. So we have two ways to look at it here. One is that, right, the real yield inverted will now chase after the gold, all right, and that will probably bring the market into inflationary problem. Or another way to look at it is that gold may pull back down to be joining the inverted yield. So this is whereby you have to be very careful here. So either gold will come back down to 1,820 area to stick back to the yield, or the yield had to rush up to meet where gold is going. Can you see that? So that means in short itself, gold and the yield is not moving in tandem. So that means that there's some artificial buying that is pushing up gold faster than the normality. So when I look at this itself, right, I cannot deny that, right, okay, they will likely bring the yield, okay, upwards, which is the concern, and also bring the gold down a little bit to meet up with the yield side to go back to normality. So this point itself will be somewhere around here. So that's about 1,850 to 1,860. So what I'm trying to say is this: if gold, as of now, is really high also, right? If gold pulls back down, right, all right, and the yields is going up, right, I think that is on purpose, and they want to meet it somewhere around here in the middle. And that after that itself, if the yield move up, then the gold will also shoot up. So that's the reason why I'm telling you guys is that, right, you have to be very careful that there's some disparity here, there's some divergence here. Traders must be very careful. And this yield that is pushing up here itself do express concern that the equity market may be in concerning factor. So this particular chart is very, very important. This chart is very, very important. All right. This is here to tell you that there will be big movement coming soon in gold and the yield market. Now, this is the US dollar index. You can see that US dollar index now has not closed so low for a long while. And of course, if you compare to the last few months, we are now at the lowest level since 2014. So why is the dollar coming down? Because the Federal Reserve keep on pumping money in the system. Right? It's going to definitely have some cost involved. And the cost now is really causing the dollar to be weak. Then, of course, when that happens itself, you do see that the equity market is enjoying it. But how long will this stand? Or all depends on the various Federal Reserve. So if Federal Reserve keep on want to print money and allow inflation to continue, that means that the dollar will depreciate further. But it will come to a point whereby the market will hit a point of, enough is enough. And then after that, the dollar may be bought up. And that is where all the things will have to develop from there. So that's why I'm saying this: dollar traders, right, who are involved in Forex market, be careful on this dollar move, okay? If the market say enough is enough, let's buy back something that's safe haven, then if the dollar has to move, the gold will come down pretty fast, okay? Now, you can see that why am I concerned here? Because the US dollar net position is now the largest since late February by the CFTC. So now the net short position is really the highest in this commodity futures trading commission data released on last Friday. And the position now is at $27.89 billion. It was only $15 billion the last week. So that means that now there are a lot of shorts in the market. Now, when everybody is on one side of the market, I always tell you this: be very, very careful. So that's why my personal opinion is this: as long as the dollar doesn't go up, fine. The market will stay status quo. But once you see the dollar start to move up slowly, right, that is where the concern comes in, okay? So traders, you must understand this. This is a very big position for the US dollar. Be careful on that, okay? Now, this is the US dollar over the last 10 years. You can see that every time the US dollar come down, this is the quarter chart, by the way, quarter. You can see that when the US dollar come down to about 90, that is where the last time in 2018, the market recovered to 100. So do note again, this is where the market break out from 90. So this become a resistant turn support level on the for the dollar. Can you see that? This is a very strong dollar support over here. and the last time was around here at 80. So it's like, you know, from 80 it stays supported for a while. Then after that, from 80 it bursts up to all the way to the high of 110. So now the thing is this, now it's back down to 90, and that is a common base. So if the dollar is to plunge below 90, then of course gold will shoot through the roof. All right. So this one is also tell you that you are now at a position whereby if the dollar really starts to move whichever direction, the gold will go crazy. Okay. So if you ask me, I kind of suspect that likely the dollar will be going up. If you ask me, the dollar likely will be going up. Not a lot, but it will go up. And when that happens itself, right, commodities and gold prices will come down. Probably that's one another reason why there's the US Federal Reserve now in a checkmate position. Bring up the dollar means it's about the, you know, doing this. That's why the reverse repo operation does tells me that this is what they're trying to do to buy back the US dollar. Okay, so traders testing all that. Now you can see that because of that, silver has been doing out very well compared to the other commodities like crude oil and copper. Also did well, but silver is the best. Silver is up by quite a high level, almost 7%. So that's why commodities all are moving up because of the US dollar that is at the lower end. That's the reason for everything now. Okay. All right. So now for why am I worried? Because now we have the gasoline. I mean the gas price now. Gasoline is now at the highest level in 7 years. So this is really the high level. So when the market is at a high level at 3.04, that means that the market may want to cool the market down a bit, because if it's too high, people can't afford it, right? There'll be angry people. So in order to do this, they must increase the buying purchasing power. So I also believe that because of that, likely the US dollar may be prop up in the near future. Okay, so again, that is my personal view lah. And of course, you can see that with the US industrial sector surprise index is all the way down, because that means that people, you know, all expected the numbers to be good, but all the recent economic figures are not that fantastic, while the stock prices are kept on going higher, right? So obviously, we do happen to think that, right, inflation will turn to stagflation, and when that happens, people get into recession. Okay, so stagflation, when it happens itself, recession is always around the corner. All right, so you have to be very, very careful on this. And of course, last but not least, you can see that we have a very interesting phenomenon. We do see that a lot of people buying into this market, and that is a money market. Can you see that? The money market. So we have a very huge inflow of money market into the system. And why is that so? Likely because they may think that the US dollar is going to strengthen, or they think that, right, the whole market itself is going to move away from the equity market, because if the interest rate factors do come in, then the equity market will fall. So they rather buy something that is good for them, and that is what I suspect that this is why. So now there's a huge inflows, about $53.2 billion, the highest in 4 weeks. All right, this is actually that it could actually alter the US monetary policy, okay, and shake up asset markets. So traders, all this tells you that you have to be very careful, because this is something that you don't pick up on the mainstream media. The mainstream media won't tell you all this. So you have to take note of the market, right? So whenever the market is rise, if you mean buy the bottom, then wait for pullback, then you buy, it'll be safer for you overall. Okay, so hopefully you guys like this sharing, and I come to the end of today's MAO. I really hope that you guys will benefit of this. Just take note again, today the market, US market is closed, so likely the market will be pretty sideways. So don't go too heavy. Take care, do your risk management, and all the best. All right, thank you guys once again. Take care. Have a great day. This is Kel signing off. Bye-bye.